HT Smartcast.
You are listening to a Mint production brought to you by HT Smartcast.
Hi, I am Abhinav Kaul and welcome to this edition of Mint Guru Portfolio. Tejas Khoday got hooked to the stock markets after watching the stock price ticker running on a business news channel. An avid chess player, Tejas likes practicing martial arts and applies skills like focus and discipline learned from there in his investments too. He doesn't hold more than 5 stocks in his portfolio. Tejas, who is the co-founder and chief executive officer of FYERS, a brokerage for stock traders, shared his investment strategy and financial journey for the special Mint series Guru Portfolio. Let's listen in.
Hi, welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started on your money journey.
If you can start at the beginning with your family details, your educational background.
Right. So my educational background is I did my master's in finance. I did my PGDF finance, and then I went on to work at various different companies, including a brokerage early in my career. That's how I got started. My family background, well, basically, my father was a businessman, but he died early. So I kind of grew up trying to learn the ropes of business just by myself and with my brothers. So yeah, that's my family background.
Right. And how did your initiation happen into the stock markets?
So truth be told, I was actually fascinated by the stock markets early when I was in high school because I wanted to know. I was flipping through channels and I was like, why are these numbers moving on CNBC? And I became really curious to understand that. But besides that, my father was actually indebted in his business. And so the movement in the interest rates impacted him. So in high school, I dropped science and took up economics to understand how can interest rates change after you take a loan. So actually my curiosity changed from there, trying to learn how floating interest rates work. And yeah, so that's how I got started.
And what were the initial steps? I mean, you mentioned in the high school. Did you start investing at that point, or when did you start investing?
I did actually. So I was initiated by my friend's father who lived in the neighborhood. So he was investing in IPOs back in the day. This was in 2006, somewhere in and around that year. And I didn't really have any money, so he'd give me some money to invest. So I opened a Demat account and started buying infrastructure and real estate IPOs back in the day. So yeah, I mean, that's how I got started. And I've seen the markets go up wildly and crash. So I've seen the entire roller coaster journey since then. And instead of being deterred, I was just more determined to understand why it happens, and that why led me to explore more.
Right. And what were the initial stocks or any different asset class that you invested in at that point?
Well, when I first got started, I was mostly an equities guy because that was hot back then, and I didn't know anything else. But yeah, primarily equities, and later on commodities. When I became a professional trader at a prop trading firm, Futures First, I was trading commodities there, energy markets.
And what were the initial stocks that you picked?
Initial stock that I picked were the likes of DLF, these and the infrastructure stocks. But I very vividly remember DLF.
Right. And I would talk about your first job in investing or in trading.
So my first job was actually at a brokerage. Back in the day, I was one of the first few employees of Zerodha back in 2011.
Okay.
Yeah, so when the company was obscure almost. So I was one of the initial members of the team then. Yeah.
And what was the nature of the job?
Well, I was basically doing a little bit of everything. I was in customer support, risk, sales, all of that. So primarily support, trying to help traders place buy and sell orders. Yeah, so that was my first job description.
Right. And you were trading or investing on the side?
I was learning how traders behave. So most of the traders back then were in derivatives, futures and options. And so I got a first-hand inside experience on how traders behave in different times of the month. In the sense, during expiry days, what was generally the trading behavior, positions that traders would initiate, that sort of thing. I got to see that very early on when I was maybe about 22 years of age or something. Yeah.
And when did you leave Zerodha?
I left there, I think by 2012 or so, I was out. I was there for a brief period, and then I moved on for better career prospects as a proprietary trader.
And this was with which one?
This was with Futures First. So Futures First is actually a prop trading firm, which is of course based out of London, but they have offices in India. So there I traded energy markets on NYMEX and Intercontinental Exchange.
And when did serious investing started happening?
Well, to be honest, I didn't really have much money to invest, right? And I spent most of my time trying to learn how to invest, but the money to invest finally came after I started a brokerage. And after, I finally, the brokerage turned profitable and so on. So that's when I finally started to invest seriously. But up until then, I was just upskilling, learning how to invest and how to time the markets essentially.
Any strategy you had formed up in your initial days?
Well, I think counter-cyclical investing works, and I've always been a big fan of that. In the sense, I mean, not specifically counter-cyclical, but I think the whole concept of buying and waiting out various several business cycles at a stretch requires you to get in at a time when the downside is limited, and that generally happens when the markets are looking very negative, right? That does not happen when you see numbers like, okay, there are 1 million demat accounts being opened or 2 million demat accounts being opened every month. That's not really the right time for long-term investing. That's probably the right time to do momentum trading, right? And as it has turned out, markets topped out last year. Most of the first-timers and the excited investors got washed out. And then I think for the long term, I believe in counter-cyclical investing. And for the short and medium term, I believe in, going with the momentum.
Okay, so this strategy you're still following?
I absolutely am, yeah.
So talking about pre-FYERS, it's the period before 2015, 2016. Any memorable trades or big trades you remember from that period?
Yeah, so having been part of a prop trading firm trading energy markets, I was also at I was fortunate to interact with macro traders at the firm who were trading currencies and precious metals and the like. So, I had some really good trades in 2014, 15, when the currency moved significantly. So India's currency depreciated from 53 all the way till 69. So I was able to catch that trade. Also before that, when Moody's downgraded US, at the time gold had really crashed. And that was another time when I was able to capture bulk of the move. So my biggest trades, I think, would be precious metals and currency.
So how much percentage gains of your current overall wealth would you assign to these two trades that you mentioned?
Well, right now I run a business which is fairly large, but at the time I think 15 to 20% of my earnings back at the time. I didn't have much money to really trade too much back then, but like I said, bulk of the money was made after the business started to make profits. And so, I think back then about 15 to 25% of my savings, something like that.
Right. Okay.
Yeah.
So after Futures First, you started FYERS. So what motivated you to start your own firm?
Yeah, so the thing was that While I had experience working at Indian brokerages like Zerodha and others, right, and I felt that there was a serious but the difference between what the Indian traders had as platforms here in India versus what global players and global traders had, there was a stark difference between that. So in terms of the product features, in terms of the data that they had at their disposal to trade properly, it was on a different level. So I thought, well, can we improvise on the product and give traders far more than what is available currently in India? So, it started from there. So, and I thought, well, maybe we can do that. And the way to do that is perhaps start our own brokerage and not just become a technology company. So back then, like fintech and all was like building software was kind of hot. So we chose the more harder route by becoming a stockbroker and then providing technology which we think Indian traders will appreciate. And so, we went down that path and it worked for us. Basically, trying to improve traders' experience of trading in India.
Got it. So FYERS is positioned as a broker for serious trader, as you mentioned. So what makes you better than other brokerages for serious traders that are out there? I mean, 2-3 features that distinguishes you.
I think the fact that we understand what traders really want is what separates us quite a bit. And so because we understand what they want, we're able to deliver on their expectations, on the product features, and also in terms of what they expect in terms of services and so on. So just to give you an insight, we were the first brokerage in India to introduce something known as drag and drop trading and price ladder trading. This was price ladder trading is something that I had used on NYMEX when I was trading energy markets. So when we started a brokerage in India, we brought that feature for Indian traders. Basically, what it enables you to do is trade based on price action by looking at bid offers. I'm sure casual investors will not find it useful. So casual investors were never really our target audiences to begin with. So we started to go down the path of trying to build products which only active speculators will appreciate. So things like that. We were more focused on historical data, speed at which orders get executed. We also were one of the few brokers who popularized API trading, also known as algo trading for retail. Stuff like that.
So correct me if I'm wrong, FYERS has around 3 lakh customers as of now, which is less than other brokerages. And I understand you don't like to be compared with others, but how happy are you?
Into 4, so it's 3.5 lakh plus at the moment. So
Okay, got it. So how happy are you with where FYERS is today, and where would you like to see it in terms of users or trading volume in 2-3 years time?
Okay, so when you said other brokers are far larger, I presume that you are referring to some of the funded brokers who recently crossed maybe numbers like 1 crore and above, right?
Right.
Yeah, so the difference is, again, like I said, our target audience has always been active traders. We've never really wanted to be like a 1 crore customer company, because then what happens is the focus shifts from trying to cater to those who want to participate in the markets every day versus to those who don't even know about the markets. So we don't really want to cater to those who don't even know about the markets yet. So we were very clear on that. So we didn't really kind of like try to burn money going down that path. So FYERS is a bootstrapped company, bootstrapped startup, and we haven't raised any capital as such. And we actually are doing fairly well in terms of trading volumes and so on. So looked at in terms of that, in terms of the trading participation, I think FYERS is actually is quite up there in terms of the trading volumes, in terms of all of that stuff. Yeah.
Right.
Because it tends to attract the most serious guys. Yeah.
So talking about active traders, what would be the percentage of this section in terms of overall customer base?
I would say all our customers are traders, if you ask me. None of them would be like the once in a while investors. Almost everybody is a trader, whoever comes to FYERS.
Okay, so 100%
And
customer base is traders.
I would say not 100%, but at least 3/4 of them, maybe 75% of them will be, active participants in the market. More than
Right.
that, I'd say, more than 3/4.
Next, would it be possible to throw some light on FYERS financials in terms of profitability and revenue?
Yeah, so FY22, we did more than 100 crore. We did about 108 crores odd in revenues, and fairly profitable. We, as a private company, don't disclose our profits, but I would say our profits are in the range of 25% or so.
Now, coming to your personal portfolio, how are you invested? And we are talking here about, in percentage terms, equity, debt, gold, real estate, and alternative asset classes. How are you divided?
I'd say 0%. Can you go asset class wise? I'll tell you percentages if that works.
First is equity.
Okay, so equity will be maybe 70%.
Okay, and debt.
Debt at the moment will be nil.
Okay. Next is gold.
Nil.
Real estate.
Nothing that I've invested in, so nil.
Okay. Any alternative asset class?
Yeah, so 30%.
And this alternative will include forex and
No, not
what are
forex.
they? Okay.
I would say InvITs, and I would say just alternative asset classes like InvITs.
Okay, so 30% is in bits.
Yeah.
And you earlier mentioned about forex trading. So you don't have any portfolio in forex?
Oh, well, no, I don't have any foreign exposure as a business, so I don't see any merit in holding, foreign currency. I did at a point when I was invested in the NASDAQ stocks, but not anymore. I think when you invest in foreign assets, it's like foreign equity, you indirectly get a dollar exposure. So needing to hold dollars or foreign currency actually it's kind of diminished. So you get an indirect holding there in terms of. So for example, right, like if you buy any of the FANG stocks, so they're all denominated in dollars, right? So you don't really need to buy additional dollars just for the heck of getting exposure. So it's a better way, I think, to get exposure to dollars.
Okay. And in terms of equity, what is the percentage allocation to foreign ETFs and stocks?
Well, at the moment, it's nil. So I am really bullish on India, and I continue to be invested here. I was invested in on the NASDAQ stocks last year, but I think we got out because we thought the market was way too inflated.
And any level would you look to re-enter?
No, I think at the moment, I think the biggest opportunities over the next 5 years are in India. So I would like to be committed to our country.
Next is, how do you go about your asset allocation? Do you have any particular percentages in mind when you go to equity or alternative asset class?
Well, I don't have any set rules rules carved out in stone as such, but I think it's a function of risk appetite. I'm a high risk investor, so I like to invest in equities, and I believe in timing the markets, and yeah. So, and I have a longer time horizon. So, since I'm not looking for any fixed returns as such, so I just prefer to be invested mostly in equities. Also, I think InvITs are underrated. They offer a substantial fixed interest that none of the debt funds in India can offer. So fixed returns can come from there. So it's a really good option for those who are looking for fixed income.
So you have invested in InvITs from a point of view of dividend yielding asset class.
That's right, yeah. Because if you look at equities, the dividend yields are, even a 3% is considered a really high dividend yield in equities. And most of them are like sub 2%. So dividend investing is out of favor considering the valuations and all of that stuff. So yeah, if one is looking for fixed returns outside of debt investing, then REITs and InvITs make sense.
Right. And do you still trade?
I don't have the time to trade off late. Incredibly busy with running and scaling up the brokerage business.
Okay.
I would love to, but I genuinely do not have the time to do it at the moment.
My next question is how do you pick a stock or any asset class or business or sector for that matter?
Well, I think primarily tailwinds and observing if the management has the ability to capitalize on tailwinds, I'd say. Well, valuation is always relative. So if the entire world, equity markets around the world are overvalued, then it's just a function of that, how much are you willing to pay for any such thing. But I think if there is an industry tailwind and if we see any management that is able to capitalize on that, then the chances of profiting from such investments increases substantially. And I don't really believe in investing in all stocks across sectors as such, because in even a good sector with tailwinds, generally you have horrible managements and who are always kind of, they're unable to shake off the inertia, and they get too comfortable running things as they always are, and not being able to change. So we are kind of averse to investing in such stocks.
Now, they're just talking about market capitalizations. How are you placed in terms of large caps, small caps, and mid caps? How is your equity portfolio divided there?
I think if you invest in anything that is with everyone is already expecting, then you're unlikely to make much money. So the philosophy of investing goes something like this, right? Like discount the expected and bet on the unexpected. And so looking at investing from that standpoint, you really have to go down the market cap to see who the winners of tomorrow will be. You can't just say, okay, you're going to invest in this stock which everybody knows is a winner, and they're able to pay they want to or are willing to pay any price for that stock. Those are not the stocks that you can actually make money over a longer period of time, because bulk of the good news is already in the price. So having said that, I think we are bigger fans of investing in turnaround stories and mid-sized companies becoming larger.
So in terms of percentage, any percentage that you have?
I'd say none in penny cap. Maybe it's evenly divided between smaller large caps and mid caps. I'd say.
Okay, 50% large and small caps and 50% in mid caps.
Right.
Okay. And now talking about the performance over the past years. So your equity portfolio is divided 70% equity and 30% alternative asset class. How have they performed, equity and then the other asset class?
So we've accumulated over a period of time. So we don't really measure it in the near term. So we are not really trying to outperform the markets as such. We're just trying to hold on to good businesses which will pay their dividends over a longer period of time. So we don't even check the stocks on a daily basis. We look at corrections as opportunities to get in.
Right.
And so from that standpoint, I don't think we've even measured. So we can take
it 10 years or 15 years if you want. You can longer horizon and in the CAGR terms.
Well, so like I said, right, like I started the venture in 2015-16, and then we only got the opportunity to start investing after the company turned profitable and was able to set aside reserves for its own growth. So we haven't been investing for the last 10 or 15 years. We started recently investing, but I'd say it's too early to say. I think we need to wait it out for the next 3 to 4 years to be able to answer that question. I think short-term volatility is not something that long-term investors need to judge themselves on.
Now talking about strategies, one strategy that has worked for your portfolio and one that did not.
Okay. The strategies that has almost always worked for me is counter-cyclical investing, where, like, for example, before Modi became a prime minister, right? Like,
Mhm.
there was this, the markets were just going down because public sector banks were on the verge of defaulting
Mhm.
in 2012 and 13. Like mid 2013 was the worst time to be invested in bank stocks. So, but right after but in November 2013 or so, when markets peaked out, I mean, bottomed out, I think it was the best time to invest. But there was so much bad news out there that only in May 2014 onwards where people said, okay, the new prime minister is here and so on. So what's worked for me is always investing when other people are think that it's doomsday or something. So that's worked for me. And another thing that's worked is, I think, investing on other people's, how do I frame this? So I believe in investing in the early phase of an irrational exuberance. Like when the markets are doing well and momentum is already on, but before the momentum accelerates into a parabolic kind of a move. So that is probably the one of the easiest things to do in investing, is to just go with the flow. And then then timing becomes the issue, where you also expected to get out before everybody else. That's the more difficult part, exiting at the right time. But I think investing when the markets are extremely exuberant, and I think that's a good time to invest.
But how do you bet on something when there is a lot of pessimism in the market?
I think at that, when everybody is pessimistic, you really can't bet. You have to invest.
Mhm.
Like, you'll have to increase the time frame and just not use any leverage in your investing. Just invest with funds that you will not need ever. Like, make peace with the fact that it might go down 30-50%, and you're not going to sell out. And never do it with leverage, and just
Right.
sit it out. And so that's the way to do it in pessimistic times, because you have to make peace with the worst outcome.
But you're talking about cycles that people think will or might turn around at some point of time. I'm talking about some themes like, for example, telecom a few years back, and then manufacturing a few years back, old economy stocks a few years back. So people were saying, okay, they will not never come back.
Yeah.
People had given up on them. So how do you bet, or how do you
Develop the conviction is what you're asking me.
Yeah.
How do you develop the conviction to stay invested? Okay. So I develop my conviction from knowing that everybody is wrong. Have to develop a conviction that
Mhm.
the crowd is generally wrong. If one has conviction in that, then I think one can invest heavily in down cycles. If you believe that the crowd is always right, and you have a tendency to follow the crowd, then countercyclical investing is not for you, because you have to have that a core belief that the group of people are missing out on something. That's when you can really invest. I don't believe in investing in stocks where the best case scenario is already discounted, because the best case scenario almost never plays out. So, but when you invest in stocks where the worst case scenario is being discounted, and then there is limited downside, right? What if the worst case scenario does not happen? And then you have very limited downside. And when people realize that, okay, now the worst is behind, then your returns are going to go through the roof, and the stock finally picks back up again. So that's how countercyclical investing works. And it can only be done, I think, by people who have sufficient reserves, not those who have access to short-term capital. So most of the fund managers are averse to such investment strategies, because their investors might freak out.
My next question is, which stocks do you think have contributed most to your portfolio over the years?
Like I said, I've only started investing recently, and I believe in investing in a concentrated manner. I don't know if I should be naming any stocks that I'm currently invested in right now. But I'd say I think I'd like to bet on turnaround stories in FMCG right now.
And you mentioned concentrated bets. So how many stocks are there in your portfolio?
Like 3.
Right. And any range that you target? number of stocks?
The fewer the better.
Okay, so you would say less than 5 is what you aim for?
I think more than 5 is too much.
Now, talking about sectors, any particular sectors that you're bullish on, and any sectors that you're bearish on?
I'm always bullish on banking and financial services because it's like a high beta bet on India's growth story. And so what I'm bearish on, I think I'm bearish on unicorn startups going public.
Now, coming to your personal finance details, how many months of emergency fund do you provision for?
I think 18 months or so.
And any particular form
18
that you
to
keep it
24
in?
months. Well, low risk, low yielding returns kind of thing.
Right, and that would be, I mean, your InvITs or...
I would say InvITs.
And were you able to go on a holiday in the past year?
Yes, I was able to. For a brief period, I was on a vacation doing martial arts with my friends.
And when do you plan to take your next vacation?
I really don't know. I hope within the next 12 months.
Right. Okay. Last two questions. And the first one is, what does wealth mean to you?
I think wealth means freedom to some extent, the ability to exercise your. I think it's a function of the freedom that it can bring to your life.
And how do you identify yourself as an investor?
I'd say I'm an evolving investor. I don't stick to the same rules,
Mhm.
and I prefer to change as per the changing dynamics of the market.
Yeah, so Tejas, I think that's it from my side. It was a pleasure talking to you.
Hey, it was a pleasure talking to you too.
That's it for today. If you have any questions, you can write to us at mintmoney@livemint.com. If you want me to cover any specific topic, DM me at Abhinav Kaul at Twitter. To stay updated on this podcast, follow HT Smartcast on Facebook, Instagram, Twitter, YouTube and LinkedIn. To listen to more such podcasts, log on to htsmartcast.com or suno Nai Nazariye Se.
This was a Mint production brought to you by HT Smartcast.
HT Smartcast.